this is Surya Saha, and welcome to the Insurtech Story Podcast, the platform to spread knowledge on insurance innovation, digital disruptions, and entrepreneurship. Our website, insurtechstory.com, and we are available on Spotify, Apple, and Google. Today, we will discuss on the topic how Asia's growing middle class can drive growth in insurance. And for now, I'm delighted to welcome our guest, Rupa Malhotra, who is the head of customer and digital Asia Pacific at Zurich Insurance. Before joining Zurich, Rupa was head of digital for Chubb Insurance in the Asia Pacific. Over the years in the industry, she has gained well rounded expertise in different aspects, including natural catastrophe risk management, digital product development, and partnership management. Rupa started her career in India as a financial analyst with the leading hedge fund DE Shaw Group before entering the insurance industry and holding positions with AIG and MSIG. A passionate diversity and inclusion champion, Rupa was also recognized as one of the rising female leaders in the region by Insurance Business Asia in 2021. Rupa holds an MBA in finance with certifications in design thinking for innovation, and she is currently pursuing her postgraduate certificate in sustainable business from the University of Cambridge. She also actively volunteers at organizations like All Hands on Hearts for disaster relief and Singapore's Alzheimer's Disease Association and is a fitness enthusiast. So, Rupa, a warm welcome to the show.
Hey, Surya. Thank you so much. Thanks for that intro. Makes me feel that I'm getting old.
Well, there's a lot of interesting stuff that you have been doing all around, both of your, professionally and at your personal space. That's quite interesting to see.
Thanks.
So yeah, Rupa, would you like to talk about a bit about, anything that I've missed, perhaps you want to add to it, and something on what do you do currently?
Yeah, no, I think you did cover it well. So thanks for that. I think, yeah, in general, I'll say that it's been an interesting journey in the insurance industry. I think I've been lucky to have to work across different roles that have given me a bit of a perspective of looking at. Initially was more a number focused lens, and then increasingly as I got into the digital side in terms of from product development to how technology is shaping, I think it also gave me a lens on more on what happens on the ground, and sometimes realize how difficult it is to sell one insurance policy, right? So it's an interesting landscape for me to see from a bit of a macro level and in a hedge fund to then down to at insurance level. But outside of it, I think I do feel we are in this space of insurance, which still hasn't cracked its entry into mainstream in the financial planning for people. So that remains, I think, both a challenge and an opportunity for people like you and I and other professionals in this field. And I think then I'm really excited what it holds for the next decade for this industry for us.
Absolutely. I think the topic that we have chosen for this discussion today, it actually, I feel personally, would give a lot of input or insights on what insurance can gain from the middle class in Asia, because that's one of the driving factors of most of the region's economy in the Asia Pacific. I mean, correct me if I'm wrong, and it's great to have your expertise there. So, if I look at the GDP proportion of emerging Asia has dramatically expanded, right? Rising from 5% in 1990 to an expected 26% in 2022, and that's as per the IMF. The
Yep.
expanding middle class in Asia is evidently optimistic despite the economic challenges. Do you see this to be a prospect for the insurance and the reinsurance sector in the region, and as they begin to accumulate wealth and make plans for future retirements?
Yeah, no, I think the stats and the numbers on middle class. I think middle class is an interesting segment, right? I feel, and potentially even growing up in that class, I can resonate to some of the things from insurance lens on how I've seen insurance perspective, and then I guess in the shoes of a of let's say an insurer professional, how this middle class resonates. As you rightly said, it is the definitely no doubt about it the biggest segment across Asia, and if we look at some of the income shifts that's expected in the next not just the next decade, but in this century, we will see a lot more of people who are now right now moving into the lower to poverty, coming actually into the middle class. So there is going to be some major shifts in terms of this class even further expanding, right? And you already start talking about there's lower middle class, there's upper middle class, right? So there is further
Yeah.
divisions within this own class as well,
Yeah.
right? There is no one. So that's the interesting aspect about this one. And also, I think before we get into the opportunity, often, if you have seen, especially in Asia,
Uh-huh.
this often is also the most ignored section when it comes on insurance because one, if generally the regulator and the government tend to focus on, for the right reason, first and foremost on the low income community where they are hand to mouth, and then that's where some of the government schemes will come in, making it free, right? So, free insurance and subsidized insurance is most common in that section. And when it comes on the higher income or the emerging affluent to affluent, you don't need insurers to be incentivized to sell it to them. Both sides are kind of aligned. They know the customers or the consumers know that they have assets worth insuring, and insurers know that this is the segment who will value insurance and they can price it and actually grow. But it's the
Right.
middle
Yeah.
class which gets left out in between, right, in that
True.
story, because you don't really have the government focus or the prioritization, let's just say that, not the
Yeah.
focus. And then you don't really have the insurers also haven't really cracked the middle class. So, and that, to your point, comes back to that now when we look at either from a lens of an insurance penetration or from a growth point of view for an insurer today, yes, middle class is probably the one that will make or break in terms of whether this industry will see major shifts. Whether we'll grow, sure, we'll grow, but whether we'll actually have a major shift in the industry in terms of insurance penetration and in
Right.
terms of really unlocking, I think that's kind of where I see this middle class as an opportunity. Also, I think from what does a middle class need for their insurance need, right? That is also an aspect where, as we're saying, right, if you go down the spectrum of a lower income middle class, that's a bit more aligned towards basic protection needs. They are probably one or two events away from slipping into poverty if something happens.
Yeah.
So there, that segment is more, the needs there are still more around health, life,
Yeah.
disability, right? And as the middle class itself evolves into a bit upper middle class, as we say, then they start talking about, okay, yeah, I have some assets as well. I need to think about my wealth protection, and I do travel as well, and I now have a lot of assets. I have a home as well, and then they start going into some other. So again, I know I'm kind of don't want to just label just one a
Yeah.
big middle class was one spectrum of their of their insurance goals.
Yeah.
But I see, that's kind of the spectrum where we are playing in.
Yeah. Also, I mean, do you think, just out of curiosity, these are when we talk about middle class and insurance, there's also kind of a large gap that exists in the education of insurance among the middle class.
Mm.
And there may be, I'm not sure, technology might help to actually resolve that to an extent, of course, that how the generation Z is trying to adopt to technologies, and of course this sector can take a lot of benefit out of it. What is your opinion?
Yeah, no, I think for sure, I think technology has a role to play, I'll say across the spectrum, but I think within, especially you pointed to the right thing around this thing around awareness.
Yeah.
And then there is the middle class is still they have the very clear lens on affordability.
Yeah.
Affordability is so very important to this particular. So they're not really saying, look, I don't want to buy it, but they're saying, yeah, but this is too expensive. I'll only buy if it makes sense, right? So I think where technology has and will probably play a big role is that how can they make one insurance product I always think simple, because this is this and that relates to the awareness piece, right? It's often very difficult to expect this segment to be fully versed. Even if they have financial agents, they'll almost be like, okay, just tell me what I need, kind of a thing, rather than trying to really understand, right? So where technology can come into play is that how do we how are we able to use the new age in terms of using AI and other capability that we have today now to actually communicate insurance in a simple way, and
Yeah.
then how do we actually come up with newer models that make it affordable. And we talk about things like pay as you go as one of the things. I think there are more models that are coming in that we are looking at, right? You have players where you'll have something around, hey, it's accumulation of micro insurance that actually will help you ultimately gain a more comprehensive cover. There's always, we talk about, I said usage based, but within that, there are further categories as well. So I think technology will play a role in terms of making it affordable to the segment as well.
Right. Yeah. So, Rupa, moving on to our next discussion point, which relates to our, previous discussion as well. Customers' preferences are focusing, or rather forcing insurers to give digital first the priority, right? So, consumers in the region, especially the APAC, are opening or are open to purchasing insurance from new entrants like the new age insurtechs, including those from the outside of the sector, like the technology companies who are also diversifying to insurance and offering insurance products. And this is leading, or this has led primarily by the young and digitally active ones. So what is your expectation from this?
Yeah, I think there are some underlying commonality for insurance company to look at this sector when it comes on consumer trends, right? The
Right.
consumer in this sector, we touched on affordability, so that's
Yeah.
given.
Yeah.
They're not looking for a brand that they can associate with at this level in terms of their life, right? That's not what that matters to them at this stage. Affordability is one tick. Two,
Yeah.
as you said, they everything that they are dealing now is digital. So their experience of things has dramatically moved. So it's becoming a hygiene factor, right? And thus, it's actually if the insurers do not have that experience, it becomes an outlier rather than actually, so it's almost an implicit expectation. Having said that, we know that insurance, not all insurers are there in terms of actually providing that, so that
Yeah.
just creates friction and that just leads to people not buying it, right? So
Right.
they're not getting hung up on, oh, I don't trust the insurer. I think that consumer is almost will not even engage, and unfortunately will not see. That's where majority of the this class still does not end up buying insurance. And I think the third for the insurers is that, as you said, that because of affordability, because experience matter to them in terms of ease of transaction, they are not particularly bound by who is. They are not looking at the rating of the company or what's the balance sheet strength of it. They are more looking at, okay, which is that I can connect with, I can understand quickly what I'm actually buying. And so you see not just insurtechs, you see that's where the play of the distribution players have come expanded, and what we
True.
say now
True.
in
Yep.
terms of a partnership, right?
Yep.
You do see, of course, your super apps coming into play. Not just your super apps, your e-commerce players. They are getting into this mainstream, and what we see the rise of what we say embedded insurance. But I do see that trend to continue in the sense that we look at, for example, you start seeing a simple example is, let's say, a social media app like TikTok, which everyone engages, and probably yes, the middle class would engage in that. Now, all of a sudden in China, they started selling e-commerce, right? As an example, well, it was a natural progression for people to move into e-commerce. Say what next? What happened? They started adding insurance into it, and that just people were okay with that, and actually that is big for them right now. So that's an example of that the customer was not actually targeting to go to TikTok to buy insurance. But today, are they comfortable? Yes, it's been a journey, one, and then two, it's been contextual for them. It's been they're touching all the things. It's the experience that they have. They don't feel forced into
Yeah.
it. And also, I think in most of these cases, the players like TikTok would force insurers to change the product concept and not make it like a traditional lump sum large scale annual policy, right? So then your product innovation or the design proposition design comes into play as well. So these things are forcing, rightfully so, the insurers into thinking through really on the whole experience and proposition of product design as well.
Right. Yeah. True. So now, regulation plays a very important part in how
Hmm.
insurers can perform, be it any region um, uh, of the world. So, how you see regulators playing a major role in benefiting the middle class and insurance sector to bring more stability on the table, which is still an underlying concern in most of the Asian nations.
Yeah. No, I think regulations and I'll say government in the same breath, that I think there is a big onus, and I think again it's particularly on segments like motor insurance, health insurance, where you typically have seen. I'll take for example of health insurance, where you have typically seen high penetration of health insurance is in markets where either you have integrated healthcare, we
Right.
have public and private healthcare, where your healthcare provider itself is incentivized on the preventive side of things rather than other way around. So there the penetration is high, or where the regulations have made it compulsory for everyone, and they are either subsidized through the taxes or employers. There are various ways on how that compulsory mandatory basic level of insurance has come into play. And what has happened in those countries is, over a period of time, um, people have then complemented that with private insurance as well, and just that basic introduction has helped. So, but that's true on something like health insurance. Similarly, on motor, you see in markets where it's mandatory to have motor insurance, either third party or otherwise. Of course, you see the full take up rate, and the moment that goes away, um, people are not buying it. So I think there needs to be, without making it so keeping in mind that how do we ensure that there is enough incentive in terms of subsidies for the middle class. I think where the regulations and the government need to come into place is, first of all, creating the right infrastructure, especially when it's true for health.
Yeah.
Even if today you make it mandatory, you don't have the infrastructure in place, it doesn't help. Often in markets like, as you would know, like in India or Indonesia, the problem there in markets like these is that, yeah, for tier two, tier three cities, you don't have actually good enough public health care as well. So, or actually enough private hospitals providers as well. So there, I think so it's a bit, I'll say in this approach, it's a bit segment specific role that the government or the regulations have to come into play. So that's one side which I think is more linked to how they can play. The other side is, as we were touching, is a bit around their openness on allowing innovation in product and embracing technology. We see quite a bit of variation. A market like Singapore, of course, here, um, probably the most open government in terms of having product innovation, encouraging as much technology inclusion in terms of enabling that, and that leads to a lot of ideas, a lot of test and learn gets done, and then you see new ideas coming in. Whereas in some of the other markets in Southeast Asia, it's such a tedious task to even think of innovative ideas, because you have to go through everything or have to go through a regulatory process. In doing so, you get you have to submit so much paperwork, and that just slows down. That's just opposite of what innovation is, right?
Yep.
Because innovation
Yep.
is not getting it right the very first time. You need that right test and learn. And sure, they have had few sandbox here and there, but unless the regulators really say that, look, no, we want to give it a go. We want to make sure that our commitment to Insurtech, the whole insurance industry is such that you have the support. We actually want the penetration levels to double. They kind of need to talk a bit around how do they make the environment a bit more flexible. So I think there's a part around public-private that comes from a government side, and then there is a part around regulations on ensuring that there is more freedom around how online and product innovation can move quickly.
True. Yeah, of course. In Singapore, as you mentioned, the Monetary Authority of Singapore, and in India we have the
Yeah.
IRDAI. So of
Yes.
course they are quite open, and recently I would say
Yes.
IRDAI wasn't open quite naked back, but now they are actually doing a lot of stuff with respect to allowing innovations and
That's
product
right.
development, and encouraging Insurtech startups and so on and so forth. But if you look at countries like Vietnam and others, it's still at a very nascent stage. So I think regulation plays a major role, as you mentioned, for the development of the entire
and
sector.
I think touching on let's say India landscape, or comparing that, right? I think it's often a bit of a reflection of what's happening in the ancillary financial space. So the UPI, for example, in itself has enabled a lot in terms of how the payment of insurance premiums can be done, right? Same as with, let's say, in a lot of other markets here, but slowly but surely that's the right thing that's happening now. Insurers, governments and regulators allowing actually there's no why there needs to be any regulations around it. Has to be an annual premium, for example, or it has to be a monthly, right? You take away these old notions on how some of these things are, because then you're just giving it a bit more around so much freedom and flexibility to think differently and let new ideas come in. But then to a bit linked to your point, there is also I do feel there is this ancillary financial support growth that's happening. Some of these other assets that are developing that insurance can actually leverage in parallel. So it's just not just the insurance industry, but I think a financial sector as a whole.
Yeah, true. Well, great talking to you, Rupa. Thank you so much for the fantastic discussion and sharing your thoughts today. It was a true delight to have you as our guest. And lastly, to wrap this up, thank you for listening, and see you at our next episode. Take care and stay safe. Goodbye for now.